Hey everybody, this is Jake with TrendSpider, and due to the large amount of comments asking for a video today, I decided to do one. So thanks everybody for your interest in listening in. Today we're going to go over SPY and Boeing, BA. And what we're going to do is we're going to look at a few different things. We're going to look at the anchored VWAP, we're going to look at the anchored volume by price, and we're going to look at just overall trend lines. And so we'll first start with the trend lines, which you can see here are creating this megaphone pattern. And what I've done is I've connected this line to this point, this point to this point, and then I've connected this point to this point to create this lower line. And notice how they're pretty much parallel here. And what I've done here is on the bottom for support, I've connected the body to the body and the wick to the wick. And notice how these are more converging. And what's really interesting about this is notice that they're converging right where we've got a huge demand zone here. And what this demand zone essentially is it's a area that there are a ton of shares holding from this March 2009 low. And so you can see here, this huge block of volume means that a majority of the shares that have been traded since March of 2009 are holding from around 208, and then the next big block is around 132. Now, what you can also see is we've anchored the Alphatrends anchored VWAP from this same point, which was essentially our capitulation point. And you can see in the early days of this recovery, this area acted as perfect support both times, both in 2010 and then in 2011. And from there, we just really took off and have been quite distant from this line ever since, which is essentially just the equilibrium price since this low about over 10 years ago. And so what we can see here is there's this confluence of trendline support as well as a bunch of volume holding here. And one of the reasons price was able to drop so quickly in this panic is because if we look at where what the return was from this volume block, people were up 60%, from this first demand zone. And so if enough people say, well, I'm up 60%, I might as well take some profit. If enough people do that because enough people are holding profit, they don't care if they sell to 60% profit versus 45% profit. And then as it drops quicker, they are, it almost accelerates the profit taking because then you see your profit margin eroding. And then once we get to this demand zone, you've essentially gone back to break even. And so when you're back to break even, you're more likely to say, okay, well, I'm just going to hold at this point. I might as well maybe average down at some point. The problem is this is kind of unprecedented territory where we are seeing mass liquidations. We're seeing huge margin calls that, don't necessarily respect technical levels like they usually would, because if you get a margin call, it doesn't matter if you want to sell at the support line or not. You sell at whatever, you can sell at. And so what we have here is we've got kind of these areas below that would naturally act as kind of like a supply and demand zone that would become more in equilibrium rather than, supply is definitely outpacing demand here because there's so many people that are still in the profit. But once we get down here, that will change. Now, this theory seems great and seems like, oh, I should buy 206 then. Well, this is a theory. This does not mean that when the price gets down to 207, it's going to bounce. It just tells us this is the first level of heavy volume holding below. If you look at Boeing Airlines, you would have thought that volume weighted average price from the same point, you would have thought that the price would have had no problem catching a bid here because of how many people were holding. A lot of people probably said, oh, we're at the anchored VWAP, we're at this huge block of volume if you were looking at this. So let's say you were just playing this exactly, how you should. Let's say if you play blackjack, you're always going to have certain rules that you want to go by just to be consistent. Same thing here. This is like in blackjack. Well, price is at anchored VWAP, price is right near this big block of volume, I should buy. But in these types of times where, like I said, you're getting these mass liquidations, you're getting panic selling, it doesn't really respect these areas like it usually would. And so this is a great example of price completely ignoring this big block of volume. So we go back here, we see this same block of volume holding pretty much since 2009. And so that's pretty much telling us that this does not have to be support. It's just giving us a level of interest. And the more confluence you have, i.e. this support level here, now notice that, all trend lines and any indicator is really a function of time. As the price, let's say the price drops down to 222. The next week it drops down to 218. Notice as we increase the time, this support level is getting lower and lower. So let's say that we drop next week straight down, your support would be around 211. Well, let's say it takes 3 weeks or whatever to get down here. All of a sudden your support becomes 208 or lower. And so you always have to remember these trend lines are a function of time. You always have to remember that, the price is probably not going to go straight up to resistance or straight down. There's always some of that time factor in there too. So this is just a case study, an example of kind of using charts, but not putting too much weight on charts right now, because at the end of the day, this is unprecedented. You're going to have unprecedented moves that technicals aren't going to be respected like they usually are. So like always, you need to kind of use a mix of, everything, not just charts, not just fundamentals, not just some random news story you just heard. You have to use kind of everything together. And by using everything in conjunction, you'll have a much better plan than just using one variable, whether that's charts or whether that's just news. So being able to map this out, being able to really see where these supply and demand levels are, gives people an idea of where we may have levels of interest in the future. Hopefully this helped. Make sure to check out our webinar-podcast today at 6 p.m. Eastern on YouTube, and we will be live then with Options Mike. Thanks so much, and see you there.